Hi everybody, Alex Employer from Expert Forex, and in this video we're going to see how a client of mine made a 93% gain in 17 hours using a trading robot. Now in this video, this could be one of the most important videos that you will ever watch. It contains information that will provide you with success throughout your Forex trading career. We're going to be looking at the instruments traded and how this profitability was achieved, as well as there will be a free download in the video that you can download and study as a PDF document to get more ideas on how you could become a long-term successful trader. Now, just 5 hours ago, I received this post in the forum, had a look at it. It says, "Hi Alex, I think I finally got the hang of the EA, and look what happened only today." I have just one question. I have a lot of money in equity. How do I lock it in to prevent it from going down? Regards. And then he attaches some statistics about the trading as well as a detailed statement. So let's have a look at that information. Okay, so firstly, the client did not trade Forex. He traded indices. Now, that was the Aussie 200, the German 30, the US 30, the NASDAQ 100, and the S&P. So he traded indexes. Now, firstly, indexes are very tricky because the brokers have different policies regarding indexes, like minimum lot sizing and a whole lot of other approaches. They also have different margin requirements for the indexes. So indexes are a little bit tricky to trade. We don't particularly supply set files for indexes because of the inconsistency between broker to broker, and this trader obviously used his own settings for this particular trading. Now here is his account, and here you can see all the trading that occurred during that period. He started, and I think it's around 1 o'clock on the 5th of October, and ended roughly at 1800 hours on the 5th of December. So it's roughly a 17-hour period, and during that period he gained $9,300, and that is after depositing $10,000. So his equity, as he says in his post, has gone up considerably, and he's asking, what should he do? Now, firstly, before you start trading, you should anticipate these things. Don't ask questions when they happen. Anticipate. What happens if my equity goes down? What am I going to do? What happens if my equity doubles? What am I going to do? You need to have that pre-planned. It should be in your trading plan, so that when it happens, you just follow your plan. One of the biggest things that I've learned from one of my mentors very early in my career is that you should make plans and enter deals when you are calm, cool, and collected, drinking a cup of tea, and you have all your emotions under control. You should assume that when you place a deal, that you have gone stark raving mad. You are incapable of making any decisions because your emotions of greed, fear, lust, and all kinds of emotions will come out and kill you. So what you do is you plan every single possible outcome after you've placed the deal. You write it down, and you then say, oh, I've reached this point, I'm going to do that. Oh, I've reached this, because those plans were made when you were calm, cool, and collected, not when you panicking like this guy. He's made a fortune. He doesn't know what to do. Very, very bad. You must have a trading plan. And we talked about trading plans in a previous video, the course given by Hetty Nell focuses on trading plans, and you should really pay attention to those. Anyway, that's fantastic. He's done pretty well. He's now saying what should he do, and as you can see, he's done pretty well. But there's a hidden danger on this account, and I'm pretty sure nobody has seen this danger. And the danger is margin. Have a look at this. His margin that he's using, although he's got 19,000 in his account, he's using 14,000 margin. So he's using a huge amount of his account. Even most of his winnings are being used for margin. Now that's where margin calls come in. People think that you are doing badly when you have a margin call. This guy is so close to a margin call, it's not even funny. He doesn't realize it, and nobody that's watched this statement so far has realized it either. So he's only got $5,000 of free margin. That's 25% of what he has. The prices just have to go down slightly and he'll have a margin call. As simple as that, because the deals will be open, the margin will still be used, but his equity will drop and he'll get a margin call and he'll be profitable. So don't think you can only get a margin call if you're not profitable. This guy will get a margin call being highly profitable. So you must understand how margin works. And he is using 100-to-1 margin, so he's getting a leverage, so he's getting a good margin support. But as I said, indices are tricky. They require slightly different margin, and this guy is in such a big danger. And the sad thing, he doesn't know it. Okay, so let's move on. Now, here's a saying that should be on the wall of every Forex trader or any trader. And this saying is, a fool and his money are soon parted. Very, very wise saying. And you'll realize why I'm saying this. I've already alluded to the fact that this trader has no idea of margin management. That's one area where he will lose his money in the long run. So Thomas Tosser, what a strange name, was actually very wise when he said this particular So Thomas Tosser was a really clever guy when he said, a fool and his money is soon parted. And here's another example of what some people do when they suddenly land with a lot of money. So if we look at the long term, if you're looking at your Forex trading career over the next couple of years, I've been trading for 20 years, so it's not unrealistic to look at over a number of years. So people make money in the Forex market because they have a sustainable edge. The edge doesn't always work, but it's a sustainable edge. It gives them, they up most of the time over a long period of time. So they might have losing months and they might have losing weeks, but overall it is a sustainable edge that will give them profits over the long run. And they use good money management. Now, an edge comes in two ways. You can either have a really good success ratio, or you could have your gains much bigger than your losses. So your risk return ratio is very good. Or even the best is if you have both. If you have a high success ratio and your risk return ratio is good, you are printing money. And there are different trading approaches to use when either of those three exist. And the other thing is, if you have an above average success rate, it doesn't guarantee profitability. And if your gains are bigger than your losses, it doesn't guarantee success. It's only when you get both of them working together, or one of them working and the other one isn't that bad, that you make a lot of money. This is really key stuff. People don't think about it. They just go about trading. They don't realize that they should measure their success rate, and they should measure their risk return ratio. So what you gain per transaction is your return, and what you lose per transaction is your risk. It's telling you what your risk return ratio is. Okay, so here is my reply to the client, and I said, well done, you've done well, you've increased your equity by 93%. Close all deals immediately. He is in such a bad and dangerous position. His margin is so close to being used up, he should close his deals. Also, he's made a fundamental error in his position sizing. Your lot sizing is incredibly wrong, and you could blow your account or get a margin call very quick. With this particular EA, we suggest position sizing of 0.01 lots for every $1,000 in your account. So I say to him, you are using 1.0 lots for some of the instruments, and you're trading 5 instruments in your $10,000 account. The maximum per instrument, therefore, should be 0.02 lots. So by trading 1.0, he is very lucky because he used 50 times the risk that he should have been using. Now, luck can go both ways. He was lucky because it went that way. If it went the other way, he would have had an immediate margin call. So this client did a few things right. He got the EA to work in the correct direction, but he exposed himself to such immense risk, and that is why he got 93% return in 17 hours. Now, you must realize that when you see these huge returns in such short time, the risk element is incredibly high. The chances are actually greater that you will fail. And if you are lucky, you will succeed and your money will double. But in most cases, if you just mistime that entry, you will fail. Now, below my feedback is my signature on the forum, and this is a very serious signature because it is the way to get around all of this danger that exists. So I'm going to read it to you. Trading is not that complicated. We as traders seem to make it difficult and complicated as possible. Now, this trader, in fact, without realizing in his ignorance, has made it very dangerous for him to trade. The secret to great sustainable, now the word sustainable is very important, Forex trading is to create a portfolio of many Forex robots, or robots, trading robots, many settings, many time frames, many instruments, using the best trending instruments with trending EAs and the best sideways instruments for sideways EAs. Makes sense, doesn't it? And if you don't have enough money, the 1 cent accounts will really do well in that environment. That way, no matter what the market does, whether it goes up, your trending EAs will make money, and if it goes sideways, your sideways EAs will make money. And when the one's making money, the other one won't lose as much because of your position sizing, and vice versa. And then I say there, our plug and play bundle is a ready-made portfolio where the position sizing, the currencies, and the time frames and the settings are all coordinated to give you the best possible results without being an expert at trading at all. You can start as a total beginner because all of the major decisions have been made for you in our plug and play versions. Now, I hope all of this is starting to fit in, and the importance of money management has a place, the importance of a portfolio. Now, this trader used one EA, and he was lucky that he caught the EA. It was a trending EA, and he caught the market in a trending phase during those 17 hours. Lucky, and I stress the word lucky, because when you follow the portfolio approach, you factor luck out of the equation. You don't have to be lucky. The portfolio will look after you because the position sizing is correct. Okay, just a bit more on the plug and play versions. We're currently trading 34 various settings of those particular versions, and as you can see, it is nicely profitable. It's almost generating 10% return. That means as a beginner you can plug these EAs into your platforms, and you can trade them using the settings provided, and you have a good chance of getting these kind of returns because it is a balanced portfolio of sideways and trending EAs. And what's more, you can look at these 34 and only choose the best ones. Now, if you only choose the best ones, you could increase your results considerably. Like at the moment, the best ones are producing 23%. Now you say, oh, well, look at 93% in 17 hours, and now you're saying in 4 months you've made 23% or 9%. And really, is that what I should be expecting? And the answer is yes. If you have a balanced portfolio of Forex robots, if you make 40 to 50% return in a year, you are doing pretty well. Remember, portfolio trading is a way of managing risk and managing your position sizing. For instance, the Dream Machine here is making only slight profits in the trading, but the one thing here is we're using the same kind of lot sizing for all of our portfolio. What that is basically telling us that our position sizing is too low, and we can take more risk and generate these kind of results if we take more risk. In other words, how you take more risk is you increase your lot sizing. But certainly these plug and play EAs are a relatively risk-free way of getting involved in robot trading. But you've got to trade a portfolio. Like here we're trading 34 EAs at the same time. And you can purchase these EAs on our Cyber Monday special. The Cyber Monday special was so popular that we decided to just keep it open for the whole year. And here it is, and it's a 60% off those EAs that I just showed you: the Dream Machine, the Make Money, and the Grid Trend Multiplier. Now, the free download is 7 great, simple, and easy ways to grow and safeguard. Safeguard is so important. Now, the more experience you have, the more you start focusing on safeguarding your capital than worrying about the actual trading results, because those are, once you've got them under control, they'll do their own thing. But safeguarding your capital is something you have to do from day to day. You have to stay cool, calm, and collected when you make your position sizing decisions. So you can grow your money in the Forex market, or even in the index market, or even in the metals market. Gold is performing exceptionally well on all of our robots. It's really doing so well. So we mustn't leave gold out of the equation. But certainly, if you don't follow this, this is what will happen to your money. It will go straight down the toilet. Remember, a fool and his money will soon be parted, by Thomas Tosser. So the EA this particular trader used is the new 7-edge EA that came out last month. And there it is. You can go and read it. There's the link to that EA. And this is the one that he used to produce that 93% return on his trading in 17 hours. Now, the objective of this video was not actually to encourage you to try and make 93% return in 17 hours. The objective was to not become a fool and be separated from your money because of your trading decisions. And those trading are mainly around position sizing. Good position sizing will allow you to trade successfully for years and years. Now, as always, the links that I've mentioned in this video will be available in the description of the video, as well as in the commentary of the video. Now, I really hope you've learned something from this video: the importance of lot sizing and the importance to cash in when you're doing well. The honeymoon phases in the market do not last forever. So from me, Alex Deploy, cheerio.